Silver versus Bitcoin fight. On today's price analysis and update, we'll take a look at the individual prices of silver, gold, and Bitcoin, but we'll be looking at the silver to Bitcoin ratio, this one here, and also the Bitcoin to silver ratio too. So that's the silver versus Bitcoin part of today's analysis, brought to you by Ainslie Bullion and the gold and silver standard. We'll come back to the Bitcoin to silver ratio at the end. Let's start with silver, then do gold, then do Bitcoin, then do the silver to Bitcoin ratio. Use the time codes below to click to your favorite part straight away. So let's take a look at silver on. We're currently looking here on the weekly time frame. Now, of course, we're using the tradingview.com website. Silver is priced in USD, currently $24.60 roughly. So let's take a look at where we were last week. Last week's video entitled Gold and Silver Spring Back. That's where we had this great move back up through this downtrend line, this symmetrical triangle pattern in silver. We broke up past the $24.50 level that I was saying would need to be broken in order to be confident that we're going in a good direction, in the upward direction, if that's where you want it to go, of course. And we were wanting to see somewhere between, I think I drew it in here somewhere between $24 to $24.50. There we go, I did draw it in. Somewhere between $24 to $24.50 as the safe zone. So if we do have a retracement, and I was suggesting we probably were looking at a retracement coming because we had such a large move, then hovering somewhere between 24 and 24.50, we're still in the safe zone. So let's see where we did what we did in the last 7 days. Pop onto the daily time frame. Let's get this on the auto and let's take a look. So with silver, we certainly did see in the last week, we had a little pop up to $25.30 roughly. So that's where we're topped up. And as expected, we did have a little bit of a retrace because, again, such a large move since bouncing off the 200-day moving average right here, straight right back through the downtrend line right there, smack through 24, all the way through 24.50, this resistance level, $25.25, let's call it. And the last few days, 1, 2, 3, we came down into that zone of $24 to $24.50. So far broken back out of it. That's a positive sign. We just need it to hold now on this daily time frame. So definitely 24.50 is the line in the sand now in order to say, I think we could be creeping up to potentially the next test, and hopefully third time is a charm. I'm guessing it might be, of this very infamous $26 level. If you don't know what I'm talking about, the infamous $26 level, go watch my previous videos. All you need to know is that it's a very infamous level in terms of Fibonacci and also in terms of support and resistance. It has not held support for a very long time, and it was a massive piece of support for a while, but then a massive piece of resistance as well. So if you go look at the chart history, you'll see that $26 between 26 to 27 is just a massive inflection point. So right here, hopefully, what I'd love to see is a hold of 24.50 in the next, coming days, and then a bounce back up through 25.25, and then knocking on that door of 26. Of course, if you're new to the channel, welcome in the last week. We've got the next levels here. And as I said last week, if we break through that 26 level, the next area that we would top out at would be around about between $26.80 and $28. And then from there, you've got your $30. And then from $30, you've got your all-time high, etc. Breaking down, if we do not hold, and if we break down through 24, then you can realistically say we're coming back to this downtrend line. Just depends on when it hits. If it did it in the next week or so, then you'd be looking around about your $23.20 mark. You'd probably come up to potentially come down to test, the 200-day moving average right there. 200-day moving average, you want to hold that. Otherwise, we are going all the way back down here. But that's to see what happens in the next few weeks. I'm more bullish on silver, so I think the on balance of probability that we will hold this general area. Even if we come back down to $24, that's the line in the sand to say definitely have to hold that support. And we could creep back up to 26. So I'm more bullish on silver. I'm balanced on probability, more than 50% chance that we continue higher from here. Maybe a bit more of a dip, but continue higher rather than coming back down again into this symmetrical triangle pattern, because that's not good news. So I'm a positive, optimistic person, and we all think that precious metals in the mid to longer term are going higher anyway. You can see the direction in which it's going. And so that's my next levels, but you got to have the opposite case just in case. So that is silver for this week. Let's take a quick look at gold, then we'll go to Bitcoin, then the silver to Bitcoin ratio. So gold last week, we were at $1,933, and we had found support, and I'll show you right here. This is where we'd found support at roughly this 1900 to 1880 area, that big bounce off there, definitely remaining above the 200-day moving average, which is great to see. Also ticking up higher in the relative strength index on the daily time frame. That's good to see. This one down here as well. In the last week or so, we've remained in this this purple rectangular area, and we came up to meet rough resistance at 1,960. That's what I had been talking about last week. So at 1933, I was saying that 1960 was going to be a level of resistance, and we certainly saw that little spike up to oh, that's right. We did spike up there. There's your 1960 right there. And we spiked up through 1960. That is what I meant to say. There's your 1960 right there. So we broke up through 1960. So I did say that this would be an area of resistance. We did see a bit of resistance on the daily time frame, but then we had a move back down to that 1940 and then back up through 1960 to that 1980 area, 1987, 1988 right there, 1988, and back down. But so far, we have seen support at around about 1,950 US dollars. If I'm bullish on silver, I'm going to say I'm bullish on gold, of course. So I do think over the longer term, we are heading higher. The line in the sand, as I've been saying last week, $1,930 right there. Don't want to see it break below there again. Otherwise, we're heading back down to this $1,900 level. Have to get above the resistance of 2,000. Above 2,000 will then a bit of a no man's land. You're looking here, if I pop this in, if you are bullish on gold, on the US dollar index, the US dollar price, and you think we're going higher in the next few days and few weeks and few months, and we're all bullish on the precious metals, of course, then probably the next, I would say, realistic area of resistance is going to be these couple of levels right here. I would pop that in right there, if you can see that. So that's around about, yeah, rather than the psychological value, I'm going to say rather than the psychological value of 2,000 now, I think you're going to see the value of around about 2020 and definite resistance at 2050, because you can see that's a spike above, but it closed at around about that 2050 area, level of resistance there. It's closed at 2050 there. You can see that green wick right there, but it closed at 2050, and again, a resistance level at 2050. So that's going to be the next major level of resistance at 2050 US dollars, in my humble opinion. Of course, breaking up above there, we've been talking about this 2120 to 2140 area will be a slight level of resistance, and the big one we've been talking about, 2,400 US dollars, because that coincides with a Fibonacci level. And so that's my humble opinion in terms of the targets moving higher. That's the big macro one. We're talking months and months down the track, of course, but this is just for the new subscribers, as we do have daily and weekly, lots of new subscribers this week in particular. So that is the targets moving lower, got to hold 1930, but positive on balance of probability that we're going higher in gold in the next coming weeks. Just got to watch out for that 2050 area right there. So that's gold. Now let's take a look at Bitcoin. We haven't done it for a little bit. What we mainly do is gold, silver, and platinum, but because Ainslie also does crypto, Ainslie has been in crypto since 2017. And if you go to ainsleycrypto.com.au, you can, of course, buy crypto. You can swap your precious metals for crypto, etc. So ainsleycrypto.com.au. So let's take a look at the Bitcoin price. It's been a while. What you can see here, this is on the daily time frame. you can see here that we have been maintaining support here of this particular trend line. Again, on the daily time frame, it's drawn in through here, so that's going back to the end of last year, so the start of this year. And then we had this move down to on March the 11th roughly, and then we coincide. So that started this trend line, this uptrend line. And then, what do you know? We came back down here. Now, what happened here? This is what I was talking about last time. What happened here was on the very day that we were down here testing this trend line, BlackRock just happened to announce on June the 15th that they were applying for a Bitcoin ETF. Just happened to be. How amazingly coincidental is that? That we were coming back down to this support line, and then they mention a Bitcoin ETF, and then up we go. So it was a fake out, right? So we had a beautiful move up past $30,000, $31,500 roughly. And since then we've been in this range, and let's pop that in with the rectangle. This range roughly of between 31.4 and call it 29.6, something 29,600, so 29,600 US dollars, just broken down through that range. So some people, look, it's interesting with Bitcoin, and more people I would say are on the bullish side of the precious metals, whereas if you look on, say, X, which was previously Twitter, or a lot of the social media, you can have widely swinging opinions on where the price of Bitcoin is going to go within the next few weeks and few months. Many people believe it's going higher from here, and this will remain as support and that we track higher. Some people are really claiming that we are going to go down further and come down all the way. Some people are still claiming that we'll go down to the $12,000 mark. So back down through here around about this area right here at 12,000. Look, it's quite possible. I'm not going to say yes or no, but it's very interesting. Many more people are on opposite sides of the spectrum in terms of the crypto prices than they are with the precious metals. I think most people see precious metals going higher, but a little bit different for Bitcoin and the other cryptos. I'm on the bullish case for now. I like to remain as impartial as possible, but I will stay a little bit more on the bullish side of things. But, got to look at the targets moving lower. So one of the targets moving lower for Bitcoin is going to be right about here at your $20,000 level roughly. You're also going to be looking at very clearly here, your 15.5 roughly. And look, we can pop in that 12, and that's going to align with this level right here. So look, we'll pop in that 12. And you never know, they could come back down to one of those levels before we see a move back up. What we need to take into account, though, is the 4-year cycle. And what tends to happen, it doesn't mean it's always going to happen, what tends to happen is this vertical line right here. This indicates where the next halving is approximately going to be. That's in April of next year. What you tend to see, and I'll pop this out on the weekly time frame, what you tend to see, and let me pop, oh no, you'll have to keep these on. What you tend to see is a move up. So people anticipate the Bitcoin halving. So there's an anticipation. Sometime before the halving, and not long before, there's a sell-off. And then because the difficulty rate has been halved, or the difficulty has doubled, meaning you get less Bitcoin for your mining power, you get half the amount. What happens is the difficulty goes up, and then people speculate, and then you get a price rise within the first 1.5 to 2 years after a halving. And then you have about a 1-year sell-off, a bottoming out, and then the narrative becomes, well, the Bitcoin halving again is coming, and this was in April of 2020. You saw this big run up here, albeit quite before the halving of 2020. But you had this move down here. Now, what happened in March of 2020? Well, we know the thing that happened in March of 2020 that saw all asset prices take a big spike down for a brief period of time. So I have always said that, of course, if this black swan event didn't occur, you wouldn't have seen prices go down here. They would have bottomed out here. So in Bitcoin, that would have been around about $6,500 US dollars. So you wouldn't have seen this. You would have seen a more flat kind of consolidation, and then halving, and then again the move up. So here we are. The halving is in April. So I'm going to say I'm a little bit more bullish. What you could see though is this, and maybe some people believe this to be the case, that is this the top before the halving? So if you take a look at that, that's quite a number of months out before the halving. So some people believe this could be the top of the pre-halving top, I should say. So you could see a move back down to that 20,000, or maybe, I don't think the 12K or the 16K, but you could see a support level around about 20, and then the halving occurs, and then on our merry way again. Some people believe that we have to come up a little bit higher before the pre-halving sell-off, and many people are talking about this area here of around about $45,000 to $46,000. That coincides with this rough resistance point right here. So who is right? That remains to be seen. I'm going to say, I'll say 50-50 for now. I'll just remain on the fence on that one. But either of those scenarios, coming back down to there, and then definitely I think after the halving, we're on our way up again, or coming up to here and then a move back down and then a move up. Either one is applicable. Post a comment below. Let me know what you think in terms of Bitcoin. If you're bullish on Bitcoin in the longer term, do you think we're going to come down here to 20K or head back up to 45K before a little bit of a sell-off? Let me know your thoughts. That's Bitcoin. I won't do a big macro Bitcoin thing. Of course, I'm bullish Bitcoin, bullish crypto, and bullish precious metals. You have here the 100,000 mark, which I've just put in just as a marker. It's going to be a huge psychological value. So of course, bear that in mind. What you'll notice here, and I did mention this last time in the last Bitcoin analysis, this is the rough area where the 4-year cycle has ended previously. So around about November, December, every 4 years is where we have peaks. Okay, so just bear that in mind. See if that's right here. That's the peak in November of 2021. That's the peak in December of 2017. So 4 years from 2017 is November, December of 2021. Many people believe that 4 years from this time, so 2025, so November, December of 2025, could be an area where the cycle is finished. So that's why I've just have that drawn in, and you could draw your own conclusions as to where the price could go after the halving up until that point. Could it be here? Could it be here? Could it be at maybe this just the psychological value of 100,000? Who knows? We don't have a crystal ball, but I want to pop those in just so you know, and to keep a track of it myself because I am into the cryptos myself. Bitcoin. All right, now let's take a look at silver versus Bitcoin. We're going to first look at I'll do the Bitcoin to silver ratio, and then we'll do the silver to Bitcoin ratio. Now, what am I talking about? Of course, if we're looking at a ratio, we're looking at the ratio of one price to another. Now, this is the Bitcoin to silver ratio. So what this means is if Bitcoin is outperforming silver, so it's going higher at a faster rate, then what you're going to see is this go up. So obviously, since 2000, and it doesn't go back to 2009, but since then, silver has been, going up and down, but it's less volatile than crypto and Bitcoin. But Bitcoin's had this massive run since it was first introduced. So that's why you're seeing this go higher, obviously indicating that Bitcoin has been outperforming silver for quite some time. But peaks and troughs, of course, mainly that's to do with the Bitcoin price. If you look at this chart, you can see it very much tracks with the Bitcoin price rather than tracking with the silver price. Silver, again, because it's not as volatile. So if I take a look at, let's see, the Coinbase one, if I do that, you can see it's pretty similar. Okay. And then we'll go back to the Bitcoin to silver ratio. You can see it tracks pretty well. Okay. So obviously, as that's going down, what that means is silver is outperforming Bitcoin. And it could mean that just Bitcoin's having a massive dump and silver's not doing much. It could also be that silver's having a bit of a rise while Bitcoin is having a bit of a dump. But you could match that up to the peaks in silver as well. So let's see if we go to 2011, which was the last silver peak. It's 2013, 2012. Well, we're all the way back here. Okay, so that little area there could indicate where we had the bottoming out there. That could indicate that's where silver had its massive peak in 2011, hitting almost $50 US. But since then, Bitcoin has had a big rise, again, showing that it is outperforming silver over the longer term. Now, does this mean that we always think Bitcoin, or do I think always Bitcoin will always outperform silver? No, not necessarily. I just like looking at these charts and I like having them there. The Bitcoin to silver ratio and the silver to Bitcoin ratio, we'll show you that in just a second, to see where the tide is turning. So some people believe that silver is going to go and precious metals will go on a huge, big bull run, which I think they will, and they have been doing, but in terms of outperforming things like crypto. So that's quite possible. So if you believe that to be the case, could this be an area of resistance? Now, what this number means right here, of course, 1186, is it takes 1,186 troy ounces of silver to equate to 1 Bitcoin. So obviously, if you were looking to increase your silver holdings, let's say you love silver and you hate crypto, for example, if you're one of those people, we of course think that dollar cost averaging within your favorite assets is the way to go, not waiting for the perfect time to enter and the perfect time to exit. But if you thought, geez, I love silver, but I can see that Bitcoin's having this massive run, and maybe it was down here. Maybe it was when crypto was getting a little bit more noticed by the population, by the masses, right? So let's say 2013. So Bitcoin was outperforming silver, and then we had this dip all the way back down to 9. So it took you 9 ounces of silver to buy 1 Bitcoin, okay? Or if you were selling Bitcoin, you were only getting 9 ounces of silver. Now, let's say, for example, again, your goal is to get as much silver in your hand as possible. But you're noticing this trend, and you think this trend is going to continue, that Bitcoin is going to go higher. Okay, so what you might potentially do is go, I love silver, but you know what, I'm going to buy, I'll keep buying my regular amount of silver, but I might put a little bit more of my spare powder in Bitcoin and increase my holdings in Bitcoin because I think this is the bottom point. So right now, I'm going to buy a bunch of Bitcoin here while the ratio is around about 1 to 9, 1 to 10, because I think it's going to go on a massive run. Bitcoin's going to continue to go higher. Well, hindsight's 2020. But if you had have done that, and of course we don't have crystal balls, all that stuff, as I said before. But for example, even if you hate crypto and you bought it here and now you've seen this big run in Bitcoin and crypto. So imagine instead of dumping all of your cash just into silver at the time, again, you decide to buy a little bit of Bitcoin, and then you see it go from 1 to 9 all the way to, 1 to 12.35. Let's just say you played that first run. So this is the end of 2017 when Bitcoin went to $20,000. Well, if you had have just bought silver here, you would have had X amount of ounces of silver. But if you had have bought some Bitcoin here and played that run, and you knew where the top was, let's just say you got really lucky, no one really does, but let's say you got lucky and it came out to around about 1,200 ounces, or let's just say 1,000, maybe that's even better. It gets to 1,000 ounces of psychological value. You went, wow, I can swap my 1 Bitcoin now for 1,000 ounces of silver. I think I might do that, or you might swap a part of it. That's a way that you can up your ounces in silver by buying an asset which you're seeing, which is outperforming silver itself. Even though you only want silver and you care about it in the long term, that's all you ever want, you can have a look at other assets like Bitcoin, and you can do this with any other asset, whether that be gold or the stock market or real estate or anything. You can track ratios against any two things. Even if your ultimate goal is to get silver because you're very bullish on it, you could look, Bitcoin or some other asset seems to be going up higher for the moment. Let's play that for a little bit, for a decent amount of time, a couple of years at least, and then get more silver in my hands than I would have had previously if I had have just been buying silver. So certainly this is not a play for everyone, and most people, and we certainly agree, just dollar cost averaging into your favorite assets is the way to go. But for those who want to take that extra risk, then there's certain plays that you can do right there. Now, one thing to bear in mind is this is stuff that you would want to consider doing only over the long term. And the reason being is because, of course, moving from Bitcoin into physical silver In particular, there are premiums that you have to pay, there are fees you have to pay, spreads, etc. So this isn't for day traders. You don't want to be, or even weekly traders. You don't want to be swapping in and out of Bitcoin on a daily, in between Bitcoin and silver on a daily amount, because you've got the spreads of, selling silver and buying silver at premium, etc. But for the more macro views, it's certainly a possibility. So now that you've seen that there is some history there where you could take advantage and get more silver, or let's flip it in the opposite direction. Let's go to the silver to Bitcoin ratio. If your goal, were to get more Bitcoin in your hand, well, actually, we'll go back here. If your goal was to get more Bitcoin in your hand, there are actually points where you would consider buying silver instead, because as it's going down, then you can swap your silver for more Bitcoin. Okay, does that make sense? So if Bitcoin and silver are two of your favorite assets, you may consider playing it. But again, you would be doing it on the longer term time frames. We're talking months and months, not days and weeks. And particularly if you can analyze, low points, and you're very good at doing that, and higher points, you'll never get the top and you'll never get the bottom. That might be a play for you. Let's take a look at the silver to Bitcoin ratio. I want to show you that just because it's the inverse, and it's good to see the other perspective. And some people who I've shown this to have a feeling that, and I'm certainly not saying this, but some people I've shown this to have said, oh, that looks like it's bottomed out here. You've got a little bit of a double bottom here in silver. And so they believe that, at least over a shorter period of time, or maybe even longer period of time, that silver may outperform Bitcoin. So as this is going up, silver is outperforming Bitcoin. Okay, so it's good to see this on the opposite side. So as this is going down, silver's been way underperforming. Bitcoin's been going higher and higher. Silver has kind of been a bit stagnant. And we've had this move here, right there. You can see this move down to here, double bottom. It looks like, at least. And then in the last, in the last couple of weeks, we've seen a move a little back up. So silver in the last few weeks, I'll get it as close as I can, silver has been outperforming Bitcoin, at least in the last couple of weeks. Some people believe this will continue to go higher. What I would take a look at is the 200-day moving average. That would be a possible area of resistance right there. If we look on the relative strength index on the weekly time frame on the silver to Bitcoin ratio, we can see that it did go into the overbought territory, and then we've might be still going down to the oversold territory. We haven't been in oversold territory for a while, and what that means here is down here, that means silver was at a real point of outperforming. So Bitcoin was at a point of outperforming silver right here, like really, really outperforming silver. And then we've seen this rise. Silver has been outperforming Bitcoin for a bit, and then we got a little bit toppy. We went into this very, very outperforming on the relative strength index, and then back down again. So if you think silver has some room to move, then maybe, and this could be a point where you buy a little bit of extra silver and wait till that rises, and then swap it for Bitcoin later on down the track. And you're just playing that ratio because you love Bitcoin, you love silver, and you want to always hold both. But again, there might be opportunities where you can swap in and out of some of your stack. We wouldn't recommend doing all. You want to have a core stack of each of your favorite assets. Again, dollar cost average, etc. But if you have room to move, playing around with a bit of it can increase your ounces or increase your Satoshis by a larger amount other than if you had just been dollar cost averaging. So DCA is the way, but take a look at these ratios too. And of course, you can do this for any ratio. In particular, you could do it for if you have Tesla stocks, for example, and you also love gold, you could watch the Tesla versus gold ratio. As that's going up, Tesla is outperforming gold. If you love uranium, okay, there's some people who love uranium stocks because they think it's going to go higher. You could watch the silver to uranium. So for example, find your favorite assets, the ones that you are dollar cost averaging into, and then watch each ratio, and then you may be able to play a portion of them, again, on the longer term timeframes to up them each without having to outlay too much extra cash. Of course, bear in mind there are premiums to pay and spreads to pay when you're swapping in and out of, say, again, physical silver for Bitcoin or Bitcoin for physical silver. So you just need to take that into account. That's why we suggest, if you're going to do it, you would do it on a longer term time frame. And of course, we're going to suggest you do it all at Ainslie because we are in crypto and precious metals. So your one-stop shop for doing that, if that's something that you want to do. Of course, again, dollar cost averaging is the way. That is silver, that is gold, that is Bitcoin, and the silver versus Bitcoin topic today. I'd love you to head over to the YouTube channel and subscribe to us, of course, for everything we do. You'll get a weekly analysis, our weekly specials, our insights videos, our live show that I do every Tuesday. I talked about on Tuesday yesterday, I talked about minted versus cast versus coins, the conundrum, which one is the best one to buy. Had some decent views, so watch that live show replay and everything else we do. So please balance your wealth in an unbalanced world. Take care, and we'll see you next time.